So that is Teddy Swims' Lose Control. I love to play the blues. And I want to welcome Taylor Stork on the show today, a very good friend of mine. We just came off of an awesome event with the CHLA at the IMB Conference, and I'm so thankful to Taylor for having me at that show. Taylor, nice to have you today.
Yeah, it's great to have you. It's great to be here. Great to have you. It's great to be here, Mark. And the event was great. We got to co-host an event with Trained, with Xactus, and with Aidium. And so our members of CHLA and lots of guests, and we thought it was gonna be a small group, but it turned out to be a substantially larger group, and everybody seemed to have a good time. So we got to do it again.
Yeah. Now, Taylor is a big influencer in the industry. As you guys know, he's the COO of Developers Mortgage Company. He's also the president of the Community Home Lenders of America, the CHLA. And he's involved in a lot of technologies, an investor in tech. And I love these kind of people and surrounding myself with them. So I'm very excited to have Taylor on the show. And we got some really cool stuff we're going to talk to you about today. Maybe we'll kick it off. I know, Taylor, you got some really big events coming up. You mentioned we've got Housing Wire. There's something big on conservatorship with Fannie Mae and Freddie Mac. Maybe tell us a little bit about that first, and then we'll jump into the show after that.
Yeah, so I think it's next week. I'll be in Dallas on stage speaking at the Housing Wire Econ Summit. We're going to talk about how lenders are curating their tech stack to maximize profitability. In the last several years, we saw a bit of an absence of investment in technology post 2007, right? Mortgage land was not exactly where anyone wanted to invest any dollars. And so technology growth and investment and expansion just was kind of left behind for a while. And then, I don't know, maybe around 2017, 2018, 2019, all of a sudden technology discovered us. And it was like mortgage and technology became a thing for the first time in a very long time. And now we're seeing just an explosion in tech options, both in real estate and in mortgage, but specifically in mortgage. And it's that explosion which is finally enabling us, particularly small and mid-sized IMBs, to maximize their workflow and their efficiencies and start to navigate away from traditionally human processes in a manner that will enable us all to deliver a better product to our customers and do it in a more efficient manner for our customers, so that our customers get better pricing and more opportunities to explore homeownership. So that's kind of what I'm excited about doing. On the heels of that, so a couple of weeks later, this is not yet formally announced, so I may even be dropping out an Easter egg or breaking one and making an omelet. The CHLA, we are going to also be hosting a webinar on the release of Fannie Mae and Freddie Mac from conservatorship. And so we are putting together a pretty exciting lineup of speakers. Look, we've been in conservatorship for 15 years. 15 years ago, Congress moved to change the structure of how our enterprises operate, and for good reason, but it's time. It's time to remove the enterprises from governmental control and migrate them back to private. I don't want to say private ownership because they're publicly owned companies, but migrate them back into the private sector where they belong and had been before, and do so in a thoughtful and careful manner to ensure that we continue to protect the institutions, home ownership, the economy, the value of the MSRs that exist out there in the space, all of the things that are sensitive to a change like that, but also move forward with reinstating our housing system the way it was pre.
And so being, an operator of an IMB and as well as supporting tons of IMBs through the CHLA. What are some potential positives? Because I mean, a lot of times there's a lot of a lot of challenges going on in today's world, right? A lot of change and friction in some areas. But what are some of maybe the positive shorter term impacts this might be able to have, or where can IMBs take advantage of it as this happens? Where do those opportunities maybe open up?
So which one are we talking about? Tech, or are we talking about GSE?
I would say the GSE, and then you could also talk about tech within that. Maybe there might be some tech
together, to be honest, right? Because all these things, there's this weird Venn diagram, I believe, where policy and origination and technology all meet and support one another, because we kind of need all three. And those are the three spaces that I love to play in myself, just with where I put my energy and my focus. The opportunities for IMB specifically and for housing in general, as we see the GSEs begin to explore exiting conservatorship, the opportunity, I believe, is pretty significant. It depends on how it's done. There are a lot of big question marks, right? Because there's a million different variables. I think that it's important that we recognize that the value of the U.S. housing system in general as an investment, particularly in foreign countries, foreign countries invest in our housing. They do it by acquiring mortgage-backed securities and by investing in MSRs or investing in companies that invest in MSRs. And so it's incredibly important that that structure remain stable and predictable and consistent. We've had a fairly stable, consistent model for years upon years upon years upon years, long before HERA, long before conservatorship. I said that wrong. It's important that as we return back into a private domain structure, that we do so in a manner that keeps an eye on safety and soundness to ensure that the investors, whether at home or abroad, continue to see the asset as a place they want to put money, right? Because if they put money into the asset, then the asset is more valuable. And the more valuable the asset is, the lower interest rates are. And the lower interest rates are, the easier it is for our consumers to buy homes. And that is incredibly important. It is, quite honestly, the American dream. It's what most of us do, whether we do it as operators or we do it supporting operators. It's what we all spend our time doing. So moving the GSEs out of conservatancy or conservatorship and back into the private domain, it's important, and it presents a number of opportunities. Awesome and great and exciting. Some a little scary. So we've got some tricky waters to navigate, and we've got a handful of years to start thinking about how to navigate that. One of the things I'm excited about doing is this webinar that we're announcing, so that we can talk about how that can happen the best possible way.
That sounds great. Yeah. One of the things that I know, and many entrepreneurs would feel this, you being an entrepreneur as well as I am, but, when you remove regulation and red tape, you can remove costs and you can improve efficiency. And that's one of the things. That's why I came back in to build more tech product with trained AI and AI mortgage manufacturing. But the biggest problem I see at the moment is the cost of a mortgage. And it just keeps going up and up and up. And I think you called out some good things there. That is, we get these out of conservatorship. There may be opportunities for tech, for lenders to get those costs back down. Deregulating is one way in any industry to help facilitate that. And the cool thing is there's at least a positive optics and image about tech and improving that. And with the new technology that we have, can take a chance. We can be given a chance as lenders and IMBs and tech companies to take that challenge and try and get those costs down, which will trickle down to the consumer. So me personally, I'm excited about taking on that challenge, continuing to support IMBs, lenders, banks, anybody in the space, even the consumer, to get those costs down. And I think what you're doing is great too. We totally align on that.
Mark, I just want to give you a call out. You just pivoted from policy into tech stack and cost efficiencies beautifully. That was a beautiful transition. Beautiful transition.
I listen to you.
So here's the thing about tech and regulatory. Look, I don't think anyone wants to live in a lawless society, right? We like to have some rules. We like to know that other people are going to operate in the manner that we're going to operate. We like to know that if there's a double yellow lane, that the person traveling the opposite direction isn't going to just decide they're going to pull into our side and hit us head on, right? So we like to have some structure, right? And that's what regulation is. Regulation is some structure, and some structure is good. When regulation becomes overzealous and when regulation begins to be used as a tool to advance particular agendas, then the cost of that tool is borne by the consumer. It starts with the companies that are regulated, but it trickles down very fast. It trickles down very fast to the consumer themselves. And if you look at the cost of originating a mortgage today, right? So we've heard a couple of different numbers thrown around. It kind of depends on how you do the math. 9,000, 12,000, 14,000. There's lots of different numbers, and it all depends on how you do the math and quite candidly, who's doing the math. But regardless of how that math spins out, an inordinate amount of the money spent to originate a loan is spent trying to dance through raindrops, trying to navigate all the different competing sets of regulations where some lenders have to adhere to more than others. So let's just think about the basic fundamental models. A federally insured bank under the national banking, the NBA, the national banking law, NBL, has federal preemption, which means they are not subject to the same sets of rules that the states are subject to. So they may have to adhere to RESPA, they may have to adhere to TRID, but they don't have to adhere to California's version of RESPA or New York's version of RESPA or Florida's version of RESPA or Texas's version of RESPA. And each of those states has their own independent set of laws that follow or enforce similar rules, sometimes more rules. The IMB that's licensed in California has to follow both the federal statute and the state statute. And it's not a matter of whether or not they're following the statute. It's a matter of form over substance, right? So 99% of the time, the substance is there. We follow the rules. We do what we're supposed to do. But navigating through the raindrops to make sure that we are following it in accordance with how to document it, what the procedure is that meets this state requirement, that state requirement, and the next state requirement, process of navigating 50 different sets of state regulations plus federal regulations, plus various agencies' rulemaking as it relates to those regulations. That's a lot of raindrops. And some non-banks, some IMBs, are more exposed to more of those raindrops than others, or than some of the depositories that have a big, gigantic umbrella. And that's one of the things that, as a lender, I struggle with. Technology can help navigate a lot of that. AI and other sophisticated algorithms and tech stacks and workflows help us navigate through some of those raindrops in order to try not to get too wet, where regulation and policy doesn't really support us. The CHLA recently came out and called for the CFPB to dramatically reduce a lot of the rulemaking in place to make it more flexible, so that those very IMBs that are simultaneously navigating 2, 3, 5, 20, or 50 sets of state laws can do so with less concern about running afoul of the procedures required by the federal agencies. There's just a lot of dancing through the raindrops, and the cost, the expense of that mortgage, the $10,000 or $12,000 or $14,000, a huge amount of that is trying not to get wet. And our borrowers are the ones that pay the cost.
Yeah. Wow. That's, you don't think of all the layers between state, and federal and all of that you have to deal with. And you just really gave a great example of that. I used to run a national title insurance company. I was doing 5,000 deals a month when I was doing that before tech. And I used to build tech to try to beat my competition. But, you're 100% correct on the layers of regulation and interpretations by different bodies, right? And then you're held accountable for that. And the minute there's one blip, the IMB has to take it, on the chin for that. It's really frustrating. So I understand it. That's a great demonstration of that, Taylor. Thank you for that. So I know we're running out of time. I want to make sure. So one of the cool parts of the show, as I mentioned, is you have a lot of creativity. You're a brilliant guy, Taylor. And I wanted to at least talk about how you've used your creative talent in the success of your career, because you've got a lot of things rolling, right? You've got the CHLA, you've got a mortgage company, you've got tech investments, and I'm sure you got a million other ideas. How do you bring that creativity in, and what could you give our viewers, some of that glimpse into that?
Wow, that is a great question. I don't have the best answer for that. I try to find ways to leverage my activity in originations so that it supports my activity in tech. I try to find ways to leverage my exposure to tech in terms of bringing that information into the policy arena. Because what I find is that people in tech don't always understand what the people in mortgage and originations do, the operators. And the operators in mortgage don't always understand how the policymakers operate and how they think and how they talk. We even use different language, like different jargon. It's amazing how often just the words used from one of the three disciplines, those words differ from the others. And so what I try to do more so, and Mark, you're very complimentary. You're very flattering. I appreciate your words. I'm not nearly as brilliant as you said, but what I think I do bring is an ability to translate between these different disciplines and help people in policy understand things from an operator's angle, help people in technology understand things from a policy angle, help people in tech understand, I don't know, whatever they need to understand that is ununderstandable. And when all else fails, and I can't figure it out, I take a walk and I play this little thing. So I knew you were queuing me up for that.
Yes. Yeah. You're getting me excited now that you're playing an instrument. So yeah, I had to tee you up. Let me recap though, what you just said that was brilliant. You know, clearly effective communication is so important. And you just said that. And that's something, that's a talent, that's a gift to be able to hear something, take all this information and condense it so that it's palatable, so that you can create transparency. And that is the true mark of leadership right there, and getting everybody to be able to buy in and take ownership of initiatives and doing things. So that's awesome. Love that. Well, this has been great. I think that the audience is really going to enjoy. You've given us a lot of good nuggets here of information. Taylor, I'm excited for what you've got going on this year. I look forward to seeing you at several conferences, and I am going to bring you up on stage to sing with me. I got to get you up there. Bring that harmonica.
You got to give me a chance to practice. I got to work on these pipes. My pipes are not nearly as good as others.
And bring your harmonica, all right?
We'll do it. Thank you, Mark. I appreciate you having me.
Oh, thank you for joining me.